Good afternoon, traders. It's the 12th of July. It's a quick summary of today's interesting action. You got some enthusiasm to the upside as always with any type of positive inflation data and or relief from rate hikes. But once again, as a trader, you have to think rationally about how you want to attack the markets. And here's a quick look of what happened this morning and pretty much just jammed them. In fact, they marked them up late yesterday. That probably was front running the number, front running the possibility of this thing being a good number. As usual, what was more important was where this came from. And we talked about the 44.37 and the 15.150. Um, that being said, you get this gap higher. So, you know, your mentality as a trader has to think rationally and say, how do I want to play this? Now, the trend's up, and you obviously want to take the opportunity to get long when to get long. But do you really want to buy a market that's 40 handles higher? That being said, the plan of attack, at least in terms of how I see it, and I think the best that provides the highest probabilities are to be looking for this thing to stall out up here. Now, this wasn't posted because they only give you R1, R2. R3 was up here. I put it on. I calculated it come in somewhere around 45.20. And you can just see the market just sat up there for the longest period of time. I provide these little highlighted areas. These are turns. It just wouldn't roll. They were scalps. For what it's worth. This is actually up to buy if you're playing the trend up there. I just don't. I'm not looking for this up here. Everybody trades differently. I'm looking at the other way, and it just was one of those where you just have to stick with it, and eventually you get paid handsomely. And it was right here. The turn came finally at 10:30. It was late, but it happened once again right around R1. It's a reversal to the downside. You have momentum fading, turning down. And you can see that the NASDAQ as well did the same thing at the same time, 1027. And this was hovering around a Fibonacci level at 15.5, coming off the contract high for the year, somewhere around 16.5. So this is a Fibonacci level. I didn't have time to calculate R3 on this one. And you can see they rolled. Will they fill the gaps? I don't know. But you knew that there was going to be some type of turn down. You're going to have to pay attention now and to see how we handle this area right in here. And this is the 1500. You still got 22 handles of gap down to 78, I believe, and that would just take you a little bit below, well, right here, which is R1. We're hitting at R2 now. Anything can happen. They can still jack them up, but pay attention to momentum. See if it turns here. We're just kind of drifting here. Momentum's rising, but we're not going anywhere. So be careful in terms of if you're going to grab a long. I'm not saying you shouldn't take it if it fires up. I'm just saying make sure you get confirmation and pretty much the same with the NASDAQ as it sits between R2 and R1. So, once again, as a trader, you're saying to yourself, well, do I want to be short this? No, ideally you really don't, but it's not like they're giving you much of a shot to the upside when they gap like this. And that's why you have to look at things a little differently as a trader. So, it's just a brief summary of this morning's trade. I hope you guys were patient. I hope you guys sat with it. I even got a little bit to the point where I was about to walk away. Just enough was enough. Sometimes you get these kind of days where the outlier days where they just ram them and they just stay up there. But it's a big deal. I mean, this is kind of a big area. 4,500 is a big deal. It's the highs of this year, and it's going to be about whether or not they can maintain it. And it's still early, so be patient. Good luck. Talk to you soon.